Hi there, everyone. It's Kim Crumpus with the Price Action Traders Institute with another video. Today, I want to talk about moves in the market. The London market has been somewhat compressed and not really moving as well as the New York market, but I do want to talk about some setups, how we actually analyze the market, and what to look for if you're a new trader. All right. If you don't have a trade plan that you're following, though, it will be very difficult to capture these moves when they start. And that's why in our trade planning sessions, we prepare traders, members for upcoming moves and tell you exactly how to get into the market and where to get into the market. So let's go ahead and go out and first take a look at the euro. All right, so I want to start you off with, as I mentioned, looking at the euro dollar, and I want to kind of walk you through how we get set up for a session. And I've blanked off this right-hand side of the chart, which is once the London session gets underway and also what happens in New York. I want to begin with, first off, this is the time right around here, half hour before Frankfurt Open. This white line is the Frankfurt Open, and this line, the green line right here at the edge of this box, is the London Open. All right, so when a trader sits down and is beginning to do their analysis for the upcoming London session, they're going to look at this price action and see something that is really small, and it would be in a range. And what they would then do is say, okay, here's the range high, and here is the range low right here. Okay, so they would be looking for breaks on either side of this range, and you can see, or should be able to see, there have been no breaks to the upside. And then once the planning session is done, this is when Frankfurt opens. There would be no trade on the open, but then about 45 minutes into it, there is a break. It looks like it closes on the line, but then comes back and closes inside the line. Our traders would close this trade for a small loss. And now we're into the London Open. And what that means is this range has now changed. So they would have booked a small loss if they took that break. Let's go ahead and redraw because that's what they would do. This would stay the same here. And this now becomes the range low. Remember, this was the range low as they were beginning their analysis. This has changed a little bit. And in fact, if we measure it, it's probably only a few pips. It's not even 2 pips. All right, so a very small loss on this trade if they took that. If they didn't, again, this range holds. So let's go ahead, and I'm going to go ahead and wipe out the spot here on the chart to the right, and let's see what we got. All right, so picking up where we left off, remember, just to recap, this is the start of the London trade planning session time. This is the Frankfurt Open, this white line right here, and this green line is the London Open. And we saw that there was a break right before the London Open on the 15-minute before. It was a failed candle, and probably would have been a close back inside the range for about 1 or 2 pips. Then we see this breaks again on the London Open, and this also, because it had created a new range, now is also a failed break. But if a trader had traded this initial break, they would not have done a re-entry because they wouldn't have been at a level based on the pricing and our rules. So minor loss down in here. Then price comes back up and breaks right here, closes right on the line. So traders could have stayed or taken it off for break even essentially, or waited and then would have had to close this on the next candle for another -1 or 2 pips. This created a new range high right here. Let's go ahead and mark this with a different color. And this candle broke right here. Let's say you didn't take this initial break, but you did take this one. Now you're still in the game and you get a nice push up, and price moves about 8 pips, nothing big, pulls back, and then continues up and puts in our 20 pips for what we call a clear directional move long. And you can see at this high, it now becomes a clear directional move long. And this is your first 20 pip move on this candle if you had taken this break. Let's say you traded this and were stopped out. So what we want to do is we want to get the high on this candle right here, where the breaking line was, and good enough. It was at 42.6. So the re-entry would have been at 50. Let's see. No, price didn't get to 50 until this candle right here. So you could have done a re-entry on this candle at 50. And at this point, let's say you got in at 50, right around here. You would have gotten about 15 pips on this trade if you held it up until the New York session. All right, so not a really big move in the London session. Took a couple of hours to actually manifest this move. And I know a lot of London session traders will quit sometime right down in here. They'll move away from the market. Now it's time for us, the New York session traders, to come in. So let's go ahead and move some of this block off here and see what happens. All right, so let's pick this up and also find out what time it is. And I've already marked the charts up. This blue line right here on this candle is when I do the New York trade planning session, 6 a.m. Pacific, 9 a.m. Eastern. And it's half hour before the actual New York open on this orange line. We start looking at charts, though, at this time right here, 1 hour and a half before the New York open at 5 a.m. Pacific, 8 a.m. Eastern, which is when the New York markets open, but not technically the stock market. So at this point, we come on to the charts, New York session traders. We're going to do an overnight analysis really quickly. And we are able to see that, oh yeah, here was this break. It did this kind of move. It puts a clear directional move in. I have a clear directional move I can now work with. I can look to get long this market. And the first place I can do it happens to be right here, 15 minutes before the planning session begins. And that's exactly what some traders will do, will be to get long. If you did get long on this yellow line entry, you can see the entry moved up about 12 pips, then pulled back a little bit, and then took off, right? And this entire move was 43 pips if you stayed in through target 1, which would have been at 1780, and target 2 at 1800. All right, so this was a beautiful move. And again, this move compared to the London session was almost 2.5 times as large, right? This was 42.5 pips. All right, and the entry, again, would have been here at 17, we'll call it 62. The first target would have been up at 80, which would have been an 18-pip trade, which would have been 2 times, a little bit, 2.25 times your risk. We use an 8-pip stop on the euro. So that would have been a super trade here, but there would have been probably no reason to exit this market. You can see it was vertical. If you missed this move, the only other chance you had was here to get into this market. And it doesn't look like price came back and then just took off. There were no pullbacks. Price pushed up. And then, like I said, right here around 1800 would have been your second target. And you would have been done with this trade. This trade took about, let's see, up here at 1800. It was now, what time is it here? 8:15 California, 11:15. So not too bad. 3 hours to make what, 42 pips is a little bit over 5 times your risk in a trade. And this is how we trade the markets. These are the setups we look for every day, whether you're a London session trader or a New York session trader. This is what we do. It's a repeatable process. It's simple. It requires no indicators. It requires no special knowledge or training. It's just an ability to read the charts, know our rules, which are really simple, and execute on those rules. All right. If you have any questions, you can always reach out to me on our website, on our contact form. Our website, of course, is priceactiontradersinstitute.com. I'm Kim Crumpus, and I want to thank you for listening.